I'm not surprised, but I think you deserve a round of applause for that, because you, again, called it. You were calling it for weeks and weeks and weeks ahead of the election, that all the naysayers loading up on treasuries, loading up on gold. I can call out a billionaire, Mark Cuban. Saying the market was going to fall out of bed, and you kept saying it's so simple, and you were like, buy this market, hand over fist.
Yeah, it was on the National Review cruise. Everyone's like, oh, you had to be a Maria Bartiromo show. Yeah, she called it. She called it on the market. Everybody knows you got this.
Well, you know what? It's because the plan was so simple. I mean, we talked so much about the fact that lowering corporate taxes to 15% would be a reason to buy stocks, because it's going to lead to earnings. And we're up since then, Kevin Kelly.
Yes, we're up over 10% since the intra-night low when you actually used that language. And I like how you even used Trump verbiage, saying huge.
That Trump rally led to strong gains in the month of November, certainly. The Dow Industrial's up 4.5% since Election Day. The S&P 500 is up better than 2%. And our next guest says that we've seen in the past few weeks, it's a good omen for 2017. Joining us right now is JMP Securities President Mark Lehmann. Mark, good to see you.
Hi, Maria.
So you think this continues?
I do. I think, listen, we've had a little bit of a pause in this ferocious rally over the last 4 weeks, but I think there's a continued sense among investors, and I've been visiting with institutional investors for the last 3 or 4 days, and I think there's an acceptance of what's going on and what is going to happen with the tax policies and what's going to happen at the corporate level. And I think that we are going to see a good 17, and there's parts of the market that haven't participated over the last 4 or 5 years that I think we're already seeing, and that is going to continue.
But the leadership so far, healthcare has done well, right? Banks have done well. Is that where you want to put money?
I think that's part where you want to put money. I think parts of healthcare which have had a good year are some of the regulatory places that you guys have talked about so often. I think you're going to see that framework continue for 2017. I think the changes to Obamacare, there's not going to be this instant Obamacare repeal. That's just not going to happen. And I think there's going to be a thoughtful change to that. And I think there's going to be winners. Listen, United Health hit an all-time high yesterday, and I think that kind of speaks for what we're going to see in 2017 and beyond. And I think we're going to have a good year. Tech's been a little bit of a laggard here. I think you're going to see some IPOs in technology that didn't take place in 2016, which will reinvigorate that market. Snapchat being one that we've all talked about, and I just expect a very good 17 and beyond.
We've seen healthcare as well as banks and financials run up, but on a valuation metric compared to historical, they're still not expensive. That's why I think this rally it can resume in those two spaces. But you mentioned tech. One of the biggest things that I see happening is the rotation out of growth, which is tech, into value. These names we mentioned, healthcare as well as financials. Now, is tech going to rebound from this? Because it looks like the dollar's going to get stronger, and a lot of their sales are overseas, and that's a headwind against them. But I'm getting back to valuations. They look like a buying opportunity here, given their growth. What do you think about the stronger dollar impacting sectors like tech?
I think you're going to see parts of tech do extremely well. I think we're still in its infancy for parts of the market. So you look at what's been the call for the last 3 to 5 years. You've seen mobile been very, very strong. You've seen cloud be very, very strong, and you've seen internet obviously be strong. We're starting to get into that next phase. Cloud is still in its infancy. I think that's going to take off. You still have AI, artificial intelligence, which is going to be a theme that we're going to play for a long time. This driverless car and this kind of new automation is going to take off. You got to find the places where that's going to work. Those are in its infancy. That's going to be a theme we're going to be talking about on this show for 10 years. That's not going to change. And the cloud too. I mean, you look at what they're doing at Amazon Web Services. That's still in its infancy. You play in the places where that is a theme, I think you're going to make money. You play where the dollar's strong and stays strong, I think that's going to be a little bit tougher. And I think that's what we want to talk about.
Broadly speaking, when do you start worrying about higher, longer-term interest rates? Yesterday, the 10-year Treasury, the yield there closing at a 16-month high, highest since last summer. I think it was 2.365%.
Right. I don't think we're there yet. I mean, historically, obviously, that's on a very, very low end of the band. We've talked about through the 25 years that I've been on Wall Street, so that's still a great area. I don't see this being a 3-4% 10-year anytime soon, and I think there's plenty of room for that to go. I'm still very optimistic about the potential for raising the growth rate of the economy here. I think that's really important. I think you also have really I think we haven't talked about it yet, but this conciliatory part of both sides of the aisle that we really haven't had in Congress for a long time. We'll see what that turns into, but they're going to need, the Republicans are going to need some of the Democrats to participate when it comes to legislation here. And if you see parts of that, and we really haven't talked about that, that's not such a bad thing either for the economy.
What's your take on oil? Big move, $50 this morning, and we've got the November jobs report out tomorrow. The expectations for jobs, 179,000 jobs added to the economy last month. Unemployment rate expected to stay steady at 4.9%. When you factor in oil, is that telling you what's happening in the economy, or is that foreshadowing something to come in the economy?
Listen, the economy has been grinding its way higher for a while here, and I don't think that's going to decelerate. And I think over time, with what the 10-year's doing, with what oil's doing, it's telling you that's probably going to accelerate a little bit. Whether it's 180,000 jobs or 200,000 jobs or 160, frankly, I don't think it matters. I think the tone has been set. I think it's with the rates, with oil. I think you're seeing a better economy. I think you're seeing a better backdrop, regulatory backdrop. That's going to power the market in 17. I think there's going to be a lot of headlines saying that.
All right. We will leave it there. Mark,
Thanks,
good to
Maria.
see you.
Appreciate
Thank
it.
you so much. Mark Lehmann there.